Let's get ready for the Pennsylvania real estate exam with 100 questions on state-specific laws, principles, practice, and more. And don't miss what's happening in the bottom corner. It'll be key to your prep. We'll tell you how in a minute. Now let's get started.
Pennsylvania real estate law and practice. Fair housing laws in Pennsylvania. Under Pennsylvania fair housing laws, which of the following categories is protected from discrimination? Is it A, age, B, marital status, C, race, or D, credit score? The answer is C, race. Pennsylvania's fair housing laws protect individuals from discrimination based on race, religion, color, national origin, sex, familial status, and disability. These protections are aligned with federal laws, ensuring equal housing opportunities for all. Which law primarily governs discrimination in housing transactions in Pennsylvania? Is it A, Equal Credit Opportunity Act, B, Pennsylvania Human Relations Act, C, Truth in Lending Act, or D, Real Estate Settlement Procedures Act? The answer is B, Pennsylvania Human Relations Act. The Pennsylvania Human Relations Act is the primary state law prohibiting discrimination in housing. It mirrors federal fair housing laws and helps ensure individuals receive equal treatment in housing-related matters.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsy.ai for immediate help and a free study session with Birdsy, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
In Pennsylvania, who is responsible for enforcing the state's fair housing laws? Is it A, U.S. Department of Housing and Urban Development, HUD, B, Pennsylvania Human Relations Commission, PHRC, C, Pennsylvania Real Estate Commission, or D, Federal Trade Commission, FTC? The answer is B, Pennsylvania Human Relations Commission, PHRC. The Pennsylvania Human Relations Commission, PHRC, enforces the state's fair housing laws. It investigates complaints of discrimination and takes appropriate actions to correct violations and promote fair housing practices. Which of the following actions might be considered a violation of the Pennsylvania fair housing laws? Is it A, offering different apartment terms based on credit history, B, refusing to rent to a family with children, C, clarifying the pet policy, or D, setting income requirements for applicants? The answer is B, refusing to rent to a family with children. Under Pennsylvania fair housing laws, it is illegal to refuse to rent to a family with children. Families with one or more children are protected against discrimination based on familial status. How does Pennsylvania fair housing law address discrimination against individuals with disabilities? Is it A, it requires accommodations only if convenient for the landlord, B, it mandates reasonable accommodations for tenants with disabilities, C, it does not recognize disabilities as a protected class, or D, it allows landlords to charge additional deposits for accommodations? The answer is B, it mandates reasonable accommodations for tenants with disabilities. Pennsylvania law requires landlords to make reasonable accommodations for individuals with disabilities. This includes modifications necessary for individuals to use and enjoy their dwelling equally without imposing undue hardship on the property owner. What accommodation must a landlord make under Pennsylvania fair housing laws for a tenant with a service animal? Is it A, waive pet fees, B, provide grooming services, C, offer larger units, or D, permit overnight guests? The answer is A, waive pet fees. Fair housing laws require landlords to waive pet fees for service animals, which are essential for individuals with disabilities. This ensures equal access to housing without financial discrimination. Which of the following is not considered discrimination under Pennsylvania's fair housing laws? Is it A, refusing to rent due to race, B, offering different rents based on nationality, C, using income to make rental decisions, or D, advertising a preference for single tenants? The answer is C, using income to make rental decisions. While race or nationality cannot be factors in housing decisions, landlords can consider income levels to determine eligibility and rent affordability, which is legally acceptable. Real estate contracts in Pennsylvania. Which of the following is required in a Pennsylvania real estate contract for it to be enforceable? Is it A, the signature of a witness, B, a clear legal description of the property, C, an appraisal report, or D, a home warranty? The answer is B, a clear legal description of the property. A real estate contract in Pennsylvania must contain a clear legal description of the property to be enforceable. This ensures there is no ambiguity regarding the exact property being contracted. What is required for the assignment of a real estate contract in Pennsylvania? Is it A, approval from the mortgage lender, B, signatures from all parties involved, C, verification of the buyer's income, or D, an agreement of sale for the new buyer? The answer is B, signatures from all parties involved. In Pennsylvania, contract assignment requires the consent of all parties involved, indicated by their signatures, to ensure everyone agrees to the transfer of rights. When a buyer defaults on a real estate contract in Pennsylvania, what is a potential remedy for the seller? Is it A, specific performance, B, retention of the earnest money deposit, C, mandatory property appraisal, or D, issuing a property lien? The answer is B, retention of the earnest money deposit. Retention of the earnest money deposit is a common form of liquidated damages that compensates the seller when a buyer defaults on a real estate contract in Pennsylvania. How long does a buyer have to cancel a Pennsylvania timeshare contract after signing without penalty? Is it A, 5 calendar days, B, 10 business days, C, 3 calendar days, or D, 7 business days? The answer is A, 5 calendar days. In Pennsylvania, buyers have a right of rescission for a timeshare purchase, allowing them to cancel the contract without penalty within 5 calendar days of signing the agreement. What is the primary purpose of a right of first refusal in Pennsylvania real estate contracts? Is it A, to provide a buyer the first option to purchase a property before it is offered to others, B, to enable sellers to reject any offer from a potential buyer, C, to ensure the property is inspected by a certified inspector, or D, to establish a mandatory waiting period for other offers? The answer is A, to provide a buyer the first option to purchase a property before it is offered to others. The primary purpose of a right of first refusal is to grant the holder the opportunity to purchase a property before the seller can accept any other offers, ensuring priority consideration. Which element is essential for a legally binding real estate contract in Pennsylvania? Is it A, verbal agreement, B, written agreement, C, notarized signature, or D, third-party witness? The answer is B, written agreement. In Pennsylvania, real estate contracts must be in writing per the statute of frauds. This ensures clarity and enforceability, preventing potential disputes over verbal agreements. What is required to amend a real estate contract in Pennsylvania? Is it A, agreement of one party, B, written consent from both parties, C, approval from a court, or D, notarization of the amendment? The answer is B, written consent from both parties. Real estate contracts in Pennsylvania can be amended only if both parties provide written consent. This changes the terms legally and ensures all parties acknowledge the modification.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsy.
Disclosures required by Pennsylvania law. Which of the following must be disclosed by a seller in Pennsylvania regarding property condition? Is it A, presence of ghosts, B, lead-based paint hazards, C, owner's personal financial situation, or D, history of neighborhood crime? The answer is B, lead-based paint hazards. Pennsylvania requires sellers to disclose known material defects, including lead-based paint hazards. Federal law mandates this for homes constructed before 1978 to ensure buyer awareness of potential health risks. What must Pennsylvania sellers provide to buyers under the real estate seller disclosure law? Is it A, a copy of past appraisals, B, a complete seller disclosure form, C, a list of all previous home addresses, or D, a 5-year maintenance record? The answer is B, a complete seller disclosure form. Under the real estate seller disclosure law, sellers must disclose known material defects via a standard form to inform prospective buyers before signing a sales agreement. In Pennsylvania, which disclosure is mandated for properties located in a flood zone? Is it A, flood risk and previous flood events, B, future climate change impacts, C, insurance costs for similar properties, or D, building permits from the last 20 years? The answer is A, flood risk and previous flood events. Sellers in Pennsylvania must disclose if a property is located in a flood zone and any related past flooding events to alert potential buyers about flood risks. When must a seller provide the completed disclosure form in Pennsylvania? Is it A, at the time of listing the property, B, before signing the sales agreement, C, after the home inspection, or D, when the buyer requests it? The answer is B, before signing the sales agreement. Under Pennsylvania law, the seller must deliver a property disclosure statement to the buyer before signing a sales agreement to ensure transparency and avoid disputes. What key factor about condominium properties must be disclosed in Pennsylvania? Is it A, upcoming homeowners association special assessments, B, neighbors' personal disputes, C, property value appreciation rates, or D, windows energy efficiency ratings? The answer is A, upcoming homeowners association special assessments. In Pennsylvania, sellers of condominium properties must disclose pending special assessments, as these can impact the buyer's future financial obligations and property costs. In Pennsylvania, when is a seller required to update the disclosure form before closing? Is it A, if a new material defect is discovered after completing the form, B, only when the buyer requests it, C, during the final walkthrough, or D, not necessary if the sale is as is? The answer is A, if a new material defect is discovered after completing the form. Pennsylvania law requires the seller to update the disclosure form if new defects are discovered before closing. This ensures transparency and allows the buyer to renegotiate or withdraw if necessary, reflecting the real estate seller disclosure law. What specific hazard is a seller required to disclose under Pennsylvania law when selling a home built before 1978? Is it A, B, lead-based paint hazards, C, radon, or D, mold? The answer is B, lead-based paint hazards. Federal law, enforced in Pennsylvania, mandates disclosure of lead-based paint hazards in homes built before 1978 to protect buyers from exposure risks. The seller must provide relevant reports and educational brochures about lead hazards. Transfer of title in Pennsylvania. In Pennsylvania, which document is most commonly used to demonstrate ownership of real property? Is it A, warranty deed, B, quitclaim deed, C, deed, or D, title insurance? The answer is C, deed. In Pennsylvania, a deed is the formal document used to prove ownership of real property. It legally transfers title from the seller to the buyer upon execution and delivery. Which of the following is a primary requirement for a deed to be valid in Pennsylvania? Is it A, it must be notarized, B, it must include the buyer's social security number, C, it must be written on a special type of legal paper, or D, it must be filed with the Pennsylvania Department of Real Estate? The answer is A, it must be notarized. Notarization of deeds is crucial to validate the identity of the executing parties and ensure the deed's authenticity before recording it with the County Recorder of Deeds. What is the purpose of title insurance in a real estate transaction in Pennsylvania? Is it A, to guarantee the condition of the property, B, to protect against future real estate market downturns, C, to protect against losses from title defects or liens, or D, to ensure property taxes are paid annually? The answer is C, to protect against losses from title defects or liens. Title insurance protects property owners and lenders from financial loss related to defects in a property's title, such as prior liens or undisclosed encumbrances, providing peace of mind during ownership. Which party is primarily responsible for acknowledging a deed in Pennsylvania? Is it A, the notary public, B, the real estate agent, C, the title company, or D, the mortgage lender? The answer is A, the notary public. In Pennsylvania, a notary public acknowledges deeds, certifying that the signature is genuine and the signer is acting voluntarily, which is essential for recording the document legally. What does the process of recording a deed accomplish in Pennsylvania? Is it A, it transfers property ownership, B, it publicizes the change in ownership to protect interests, C, it determines property tax rates, or D, it ensures compliance with zoning laws? The answer is B, it publicizes the change in ownership to protect interests. Recording a deed in Pennsylvania ensures the transfer is entered into the public record, providing notice to third parties and protecting the new owner's interest against subsequent claims of ownership. In Pennsylvania, which of the following types of deeds provides the least amount of protection to the buyer? Is it A, general warranty deed, B, special warranty deed, C, quitclaim deed, or D, bargain and sale deed? The answer is C, quitclaim deed. The quitclaim deed in Pennsylvania transfers any ownership interest the seller has in the property without guarantees of title integrity, making it the least protective for buyers. What is the primary purpose of a title search in Pennsylvania real estate transactions? Is it A, to determine property boundaries, B, to establish zoning compliance, C, to establish a record of ownership, or D, to finalize the sale price? The answer is C, to establish a record of ownership. A title search examines public records to ensure clear ownership and identify any claims against the property, ensuring there are no legal barriers to purchasing the property. Earnest money and escrow in Pennsylvania. What must be included in a Pennsylvania sales agreement with respect to earnest money? Is it A, the exact amount of earnest money, B, the address of the escrow agent, C, the color of the escrow check, or D, the seller's bank account details? The answer is A, the exact amount of earnest money. In Pennsylvania, the sales agreement must clearly state the exact amount of earnest money to ensure transparency and uphold contractual obligations defined by the Pennsylvania Real Estate Commission. Under what circumstances can a broker disperse earnest money from an escrow account in Pennsylvania? Is it A, only with written instructions from both parties or a court order? B, based on verbal instructions from the seller? C, after a property inspection report is received? Or D, once the buyer obtains a mortgage commitment? The answer is A, only with written instructions from both parties or a court order. Pennsylvania law requires a broker to hold escrow funds until both parties provide written instructions or a court order dictates otherwise, ensuring proper legal processes for fund handling. What should a Pennsylvania broker do if an earnest money dispute arises? Is it A, retain the earnest money in escrow until the dispute is resolved? B, immediately release the funds to the seller? C, transfer the funds to the broker's operating account? Or D, distribute the earned interest to both parties? The answer is A, retain the earnest money in escrow until the dispute is resolved. When an earnest money dispute occurs, the broker must retain the funds in escrow until a mutual agreement is reached or a court issues an order, protecting all parties involved. How long does a Pennsylvania broker have to deposit earnest money into an escrow account? Is it A, within 1 business day of receipt? B, within 5 business days of receipt? C, before the contract is signed? Or D, within 10 business days of receipt? The answer is B, within 5 business days of receipt. According to Pennsylvania real estate regulations, brokers are required to deposit earnest money into an escrow account within 5 business days of receipt to ensure compliance and proper fund management. Who is responsible for holding title to funds in an escrow account in Pennsylvania? Is it A, the seller? B, the buyer? C, the broker managing the escrow account? Or D, the closing attorney? The answer is C, the broker managing the escrow account. In Pennsylvania, the broker managing the escrow account holds title to the escrow funds until disbursement is authorized, per State Real Estate Commission guidelines, ensuring fiduciary responsibility. In Pennsylvania, which statement is true about the disbursement of earnest money from an escrow account by a real estate broker? Is it A, it can be disbursed immediately after the agreement is signed? B, it requires mutual consent from both buyer and seller? C, it can only be disbursed upon cancellation of the sales agreement? Or D, broker's decision overrules any written agreements regarding disbursement? The answer is B, it requires mutual consent from both buyer and seller. The disbursement of earnest money typically requires mutual consent from both parties. Pennsylvania law stipulates that earnest money should remain in escrow until all parties involved agree on its release. What is the legal requirement in Pennsylvania regarding the handling of earnest money when a property deal falls through? Is it A, the broker keeps the earnest money as compensation? B, the broker must hold the money until receiving joint instructions? C, the earnest money is automatically refunded to the buyer? Or D, the broker must immediately disperse it without any further actions? The answer is B, the broker must hold the money until receiving joint instructions. In Pennsylvania, if a deal falls apart, brokers must wait for joint instructions from the buyer and seller before dispersing earnest money as dictated by the real estate escrow regulations.
Notice the code in the corner? When you're stumped by a question, enter it at birdsy.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Pennsylvania real estate taxes. What is the role of the county assessor in Pennsylvania real estate taxes? Is it A, to determine the fair market value of properties for taxation purposes? B, to collect property taxes from homeowners? C, to set the tax rate for property taxes? Or D, to issue property tax refunds? The answer is A, to determine the fair market value of properties for taxation purposes. In Pennsylvania, the county assessor's primary function is to appraise property value for tax purposes, which serves as the basis for calculating property taxes owed. Assessment impacts tax revenue generated for public services. Which type of property is exempt from real estate taxes in Pennsylvania? Is it A, commercial properties, B, government-owned properties, C, rental properties, or D, vacant land? The answer is B, government-owned properties. Government-owned properties, such as those owned by local, state, or federal government entities, are typically exempt from real estate taxes under Pennsylvania law. This exemption supports civic projects and community services. What is a homestead exemption in Pennsylvania's real estate tax context? Is it A, a complete tax exemption for owner-occupied residences, B, a partial tax reduction for owner-occupied residences, C, an exemption for investment properties, or D, a deferred tax payment option? The answer is B, a partial tax reduction for owner-occupied residences. A homestead exemption in Pennsylvania allows for a reduction in the assessed value of an owner-occupied home. This results in a lower taxable amount, reducing the overall property tax liability for the homeowner. Which entity is responsible for setting property tax rates in Pennsylvania? Is it A, the state government, B, local government authorities, C, the federal government, or D, real estate brokers? The answer is B, local government authorities. In Pennsylvania, property tax rates are determined by local government entities. These rates are applied to assessed property values to generate revenue for educational, municipal, and county services. When are Pennsylvania real estate taxes typically due? Is it A, quarterly throughout the year, B, annually, with due dates varying by locality, C, at the time of property purchase only, or D, biannually, twice a year? The answer is B, annually, with due dates varying by locality. Pennsylvania real estate taxes are due annually, but exact due dates can vary by county or municipality. This timing supports the management and funding of local government services and public works. What document typically outlines a property's assessed value for taxation in Pennsylvania? Is it A, assessment notice, B, deed, C, lease agreement, or D, survey report? The answer is A, assessment notice. In Pennsylvania, the assessment notice is issued by local authorities to inform property owners of the assessed value for tax calculations. It is crucial for understanding potential property tax liabilities. What is the purpose of a millage rate in Pennsylvania? Is it A, to determine property insurance premiums, B, to calculate property tax amounts, C, to establish property appraised value, or D, to set mortgage interest rates? The answer is B, to calculate property tax amounts. Millage rates in Pennsylvania are a tool used by local government agencies to determine tax amounts based on assessed property values, usually expressed per $1,000 of assessed value. Pennsylvania real estate licensing and regulation. What is the minimum continuing education requirement for a licensed real estate salesperson in Pennsylvania? Is it A, 10 hours every 2 years, B, 14 hours every 2 years, C, 20 hours every 2 years, or D, 28 hours every 2 years? The answer is B, 14 hours every 2 years. Licensed real estate salespersons in Pennsylvania must complete 14 hours of continuing education every 2 years to maintain their licenses as set by the Pennsylvania Real Estate Commission. Which entity is responsible for issuing real estate licenses in Pennsylvania? Is it A, Pennsylvania Department of Housing, B, Pennsylvania Real Estate Commission, C. Pennsylvania Association of Realtors, or D. Pennsylvania Consumer Protection Bureau? The answer is B. Pennsylvania Real Estate Commission. The Pennsylvania Real Estate Commission is the official regulatory body that issues and oversees real estate licenses in the state, ensuring compliance with legal standards. How many members make up the Pennsylvania Real Estate Commission, and who appoints them? Is it A. 9 members appointed by the governor, B. 10 members elected by the public, C. 7 members appointed by the state senate, or D. 12 members appointed by the General Assembly? The answer is A. 9 members appointed by the governor. The Pennsylvania Real Estate Commission is comprised of 9 members appointed by the governor as per the state's regulatory framework to oversee real estate practices. Which of the following actions is required for a Pennsylvania real estate salesperson to maintain a valid license? Is it A. Selling at least one property per year, B. Completing the state-mandated continuing education courses, C. Submitting quarterly transaction reports to the state, or D. Paying an annual fee to the Pennsylvania Real Estate Association? The answer is B. Completing the state-mandated continuing education courses. In Pennsylvania, real estate salespersons must complete continuing education courses to renew their license actively. This ensures that licensees stay updated with the latest industry knowledge and legal changes. What is a requirement for a real estate salesperson to transfer their license to another brokerage in Pennsylvania? Is it A. Complete a new licensing exam, B. Obtain a letter of release from their former broker, C. File a lawsuit against the former brokerage, or D. Wait for a mandated 30-day transition period? The answer is B. Obtain a letter of release from their former broker. To transfer a real estate license in Pennsylvania, a salesperson must obtain a letter of release from their current broker and follow transfer procedures set by the Pennsylvania Real Estate Commission. What is the primary responsibility of the Pennsylvania Real Estate Commission? Is it A. To set property tax rates for the state, B. To oversee real estate transactions involving state-owned land, C. To issue and revoke real estate licenses, or D. To manage public records of personal real estate transactions? The answer is C. To issue and revoke real estate licenses. The Pennsylvania Real Estate Commission is responsible for regulating real estate practice in the state, which includes issuing and revoking licenses. This ensures compliance with real estate laws and protects the interest of the public. Which of the following is required to maintain an active real estate salesperson license in Pennsylvania? Is it A. Submit a biennial report to the Real Estate Commission, B. Be employed with a licensed real estate broker, C. Complete a background check every 5 years, or D. Publish a public profile on the state's real estate portal? The answer is B. Be employed with a licensed real estate broker. In Pennsylvania, real estate salespersons must work under a licensed broker to perform real estate services. This association validates their practice and ensures they follow legal protocols under supervision. Pennsylvania State Real Estate Commission, PSREC. What is the main role of the Pennsylvania State Real Estate Commission? Is it A. To assist real estate agents in finding employment, B. To regulate the real estate licensing process, C. To set local property tax rates, or D. To offer legal advice to real estate clients? The answer is B. To regulate the real estate licensing process. The PSREC oversees the issuance of real estate licenses and enforces compliance with Pennsylvania real estate laws. They ensure that those selling real estate meet professional and ethical standards in the state. How does the Pennsylvania State Real Estate Commission enforce real estate law violations? Is it A. by aiding violators in restructuring their business. B. By revoking licenses and imposing fines. C. By reducing real estate taxes for compliant agents. Or D. By offering counseling services to affected clients. The answer is B. By revoking licenses and imposing fines. The PSREC enforces real estate laws by revoking licenses, imposing fines, or taking other disciplinary actions against licensees who violate professional standards or laws. Which of the following is required to be maintained by a Pennsylvania real estate broker according to PSREC regulations? Is it A. A minimum annual sales quota? B. Current and accurate transaction records? C. A specific number of employees? Or D. A list of competitive pricing strategies? The answer is B. Current and accurate transaction records. Per PSREC regulations, real estate brokers must ensure that their transaction records are current, complete, and reflect all activities associated with their brokerage. What requirement must Pennsylvania real estate licensees fulfill biennially as mandated by the PSREC? Is it A. Submit a marketing plan for approval? B. Complete continuing education credits? C. Volunteer in community service programs? Or D. Undergo a criminal background check? The answer is B. Complete continuing education credits. Licensees must complete prescribed continuing education credits every 2 years to ensure they stay current with real estate laws and practices as mandated by the PSREC. Who does the Pennsylvania State Real Estate Commission primarily hold accountable for real estate transactions? Is it A. The buyers only? B. Licensed real estate entities? C. Property developers? Or D. Mortgage lenders only? The answer is B. Licensed real estate entities. The PSREC primarily regulates and oversees the activities of licensed real estate professionals, ensuring compliance with Pennsylvania real estate laws in all transactions. Pennsylvania real estate finance. Loan fundamentals. What is the primary purpose of a promissory note in real estate financing? Is it A. To serve as evidence of a property's title? B. To outline the terms of a loan repayment? C. To secure the loan against collateral? Or D. To calculate the property's market value? The answer is B. To outline the terms of a loan repayment. In Pennsylvania real estate finance, the promissory note is a legal instrument that obligates the borrower to repay a specified sum under agreed terms, separate from the security interest provided by a mortgage. How does a fixed-rate mortgage differ from an adjustable-rate mortgage, ARM? Is it A. Fixed-rate mortgages have interest rates that change over time? B. Adjustable-rate mortgages have interest rates that can fluctuate based on the market? C. Fixed-rate mortgages are exclusively available for commercial properties? Or D. Adjustable-rate mortgages are guaranteed to decrease over time? The answer is B. Adjustable-rate mortgages have interest rates that can fluctuate based on the market. In Pennsylvania, fixed-rate mortgages lock in an interest rate for the loan's lifespan, whereas adjustable-rate mortgages, ARMs, have interest rates that adjust periodically based on a financial index, thus impacting monthly payments. What is the role of a mortgage in a real estate finance agreement? Is it A. To provide the borrower legal ownership of the property? B. To act as security for the promissory note? C. To document compliance with fair housing laws? Or D. To detail the home inspection results? The answer is B. To act as security for the promissory note. In Pennsylvania, a mortgage acts as collateral for the loan expressed in the promissory note, providing legal recourse for the lender to claim the property if the borrower defaults on repayments. Which type of loan requires the borrower to pay part of the interest in advance? Is it A. Negative amortization loan? B. Subprime loan? C. Discount point loan. Or D. Balloon payment loan. The answer is C. Discount point loan. In Pennsylvania real estate finance, a discount point loan allows the borrower to pay interest upfront as points, decreasing the loan's overall interest rate and potentially saving on long-term interest costs. What is the benefit of a prepayment clause in a mortgage agreement? Is it A. It enables the lender to increase interest rates. B. It permits the borrower to repay the loan early without penalties. C. It requires borrowers to pay additional fees for early repayment. Or D. It extends the duration of the loan beyond the original term. The answer is B. It permits the borrower to repay the loan early without penalties. In Pennsylvania real estate transactions, a prepayment clause can be advantageous as it allows borrowers the flexibility to repay their loan ahead of schedule without being subject to financial penalties, benefiting those aiming for financial savings. In Pennsylvania, what document serves as evidence of a debt secured by real property? Is it A. Deed, B. Mortgage, C. Title, or D. Lease? The answer is B. Mortgage. In Pennsylvania real estate transactions, a mortgage acts as evidence of a loan secured by property, detailing the debt and the borrower's obligation to repay the lender. What is a significant feature of a balloon mortgage? Is it A. Regular equal payments until the debt is completely paid? B. A large final payment to satisfy the remaining debt? C. Interest payments only for the entire term? Or D. An interest rate that adjusts periodically? The answer is B. A large final payment to satisfy the remaining debt. A balloon mortgage requires a large final payment after smaller periodic payments. It's structurally different from fully amortizing loans, which pay off with routine installments over time.
Your input is valuable. Share your study tips, challenges, or thoughts about the exam in the comments section. Let's help each other succeed.
Loan types. What is a key characteristic of a conventional loan in Pennsylvania? Is it A. It is guaranteed by the federal government? B. It requires private mortgage insurance with a low down payment? C. It is only available to veterans? Or D. It is only available for first-time homebuyers? The answer is B. It requires private mortgage insurance with a low down payment. Conventional loans require private mortgage insurance, PMI, if the down payment is less than 20%. They are not government insured, making them distinct from FHA and VA loans. Which of the following is a benefit of an FHA loan? Is it A. Lower closing costs compared to conventional loans? B. No mortgage insurance required? C. Exclusively for military personnel? Or D. Provided by real estate brokers? The answer is A. Lower closing costs compared to conventional loans. FHA loans are insured by the Federal Housing Administration and are popular due to their lower down payment and closing cost requirements, enhancing affordability for low to middle income buyers. What distinguishes a VA loan from other types of real estate loans in Pennsylvania? Is it A. They require very high credit scores? B. No down payment is typically required? C. They are only available for rural properties? Or D. They have the highest interest rates? The answer is B. No down payment is typically required. VA loans, guaranteed by the Department of Veterans Affairs, offer unique advantages, like no down payment for eligible veterans, making homeownership more accessible for service members. What aspect is common to an FHA and a VA loan? Is it A. They both require PMI? B. They are both backed by the federal government? C. They are only for first-time homebuyers? Or D. They both include a funding fee? The answer is B. They are both backed by the federal government. Both FHA loans and VA loans are insured by government entities, offering protections to lenders and enabling borrowers to access favorable terms not typically available with conventional loans. Which type of loan typically offers the lowest initial interest rate? Is it A, fixed conventional loan, B, adjustable rate mortgage ARM, C, an FHA 203K loan, or D, VA fixed rate loan? The answer is B, adjustable rate mortgage ARM. Adjustable rate mortgages, ARMs, offer lower interest rates initially, which can adjust up or down during the life of the loan, depending on market conditions, making them attractive for short-term homeownership. What is one requirement for obtaining a VA loan in Pennsylvania? Is it A, minimum 20% down payment, B, eligible military service, C, excellent credit score, or D, private mortgage insurance? The answer is B, eligible military service. VA loans are specifically for eligible veterans, active duty military personnel, and certain others. They feature benefits such as no down payment and no requirement for private mortgage insurance. Which loan type is partially secured by the U.S. government? Is it A, conventional loan, B, Federal Housing Administration FHA loan, C, portfolio loan, or D, jumbo loan? The answer is B, Federal Housing Administration FHA loan. FHA loans are insured by the Federal Housing Administration. This insurance reduces the lender's risk and often allows for more agreeable loan terms to borrowers. Loan qualifications. What minimum credit score is generally considered acceptable by lenders for conventional loans in Pennsylvania? Is it A, 580, B, 620, C, 700, or D, 7? The answer is B, 620. Lenders often require a minimum credit score of 620 for conventional loans in Pennsylvania, as per guidelines outlined by Fannie Mae and Freddie Mac. Higher scores are advantageous for better terms. Which of the following income verification methods is commonly used by lenders during the mortgage qualification process? Is it A, self-reported income, B, tax return, C, verbal confirmation, or D, credit card statements? The answer is B, tax returns. Lenders typically require tax returns from the past 2 years to confirm income stability for loan qualification, according to standards set by Fannie Mae and Freddie Mac. What is the importance of the debt-to-income DTI ratio in Pennsylvania's mortgage qualification process? Is it A, determines tax liabilities, B, assesses loan repayment ability, C, establishes closing costs, or D, sets the interest rate? The answer is B, assesses loan repayment ability. The debt-to-income ratio helps lenders evaluate whether the borrower can manage additional debt payments in light of existing financial obligations as required by FHA guidelines. Which document verifies the employment history of a loan applicant? Is it A, pay stubs, B, W-2 forms, C, bank statements, or D, utility bills? The answer is B, W-2 forms. W-2 forms are pivotal in demonstrating a borrower's employment history across several years, offering lenders a consistent view of income stability for qualification purposes. What role does a loan-to-value LTV ratio play in qualifying for a mortgage in Pennsylvania? Is it A, establishes loan amortization schedule, B, determines down payment amount required, C, sets maximum interest rate on the loan, or D, calculates tax obligations? The answer is B, determines down payment amount required. The loan-to-value ratio helps lenders calculate the minimum down payment requirement, which is crucial for ensuring they can recoup their investment, especially if the LTV exceeds 80%. What is a key criterion used by lenders in Pennsylvania to determine an applicant's mortgage eligibility? Is it A, monthly grocery expenses, B, credit history, C, number of dependents, or D, utility bills? The answer is B, credit history. Credit history is vital as it indicates how borrowers manage debt. Lenders in Pennsylvania review this to estimate the risk of lending and set the terms of the mortgage. Which type of employment history is typically required by mortgage lenders in Pennsylvania? Is it A, at least 1 month of employment, B, 2 years of continuous employment, C, experience in multiple industries, or D, seasonal employment? The answer is B, 2 years of continuous employment. Lenders typically require a 2-year employment history, as it reflects the applicant's income steadiness and reliability when deciding on loan approvals. The loan application process. What is the purpose of a loan estimate in the Pennsylvania real estate loan application process? Is it A, to provide an initial summary of loan details and costs, B, to finalize loan terms and conditions, C, to verify the borrower's employment and income, or D, to record the borrower's credit score? The answer is A, to provide an initial summary of loan details and costs. The loan estimate, given to the borrower within 3 business days after application, details crucial loan information such as terms, projected payments, and closing costs. It ensures transparency and helps the borrower understand financial obligations. Which document is required by lenders to ensure an accurate assessment of a borrower's financial status? Is it A, credit report, B, appraisal report, C, pre-qualification letter, or D, purchase agreement? The answer is A, credit report. Lenders use credit reports to evaluate the borrower's creditworthiness, examining credit history and scores. This helps in determining loan eligibility and risk assessment alongside other documents. When is the loan estimate document issued during the Pennsylvania loan application process? Is it A, within 3 business days after receiving a completed loan application, B, after the borrower signs the purchase agreement, C, at the loan closing period, or D, once the appraisal is completed? The answer is A, within 3 business days after receiving a completed loan application. The loan estimate must be provided within 3 business days of a completed application as per TRID regulations, ensuring borrowers are informed of costs early in the process, maintaining transparency. Which of the following is not a component required in a loan application for a mortgage in Pennsylvania? Is it A, property appraisal, B, borrower's income information, C, borrower's credit history, or D, list of assets and liabilities? The answer is A, property appraisal. The initial loan application focuses on the borrower's financial data and personal information. A property appraisal occurs later to verify the property's value against the loan amount. Which document is typically required from the borrower during the mortgage loan application to verify employment? Is it A, recent pay stubs, B, bank account statements, C, tax returns, or D, credit card statements? The answer is A, recent pay stubs. To ensure the borrower can sustain loan payments, lenders require employment verification via documents like recent pay stubs, providing current income and employment status confirmation within the application process. What must a borrower provide to verify their income during the Pennsylvania loan application process? Is it A, pay stubs and bank statements, B, property appraisal report, C, sales agreement, or D, title insurance policy? The answer is A, pay stubs and bank statements. Lenders require pay stubs and bank statements to verify the borrower's income during the loan application process in Pennsylvania, ensuring they have the financial ability to repay the loan. Which document summarizes the costs associated with obtaining a loan required during the application process in Pennsylvania? Is it A, closing disclosure, B, deed of trust, C, pre-approval letter, or D, escrow account statement? The answer is A, closing disclosure. The closing disclosure form provides borrowers with a comprehensive summary of all costs involved in obtaining a loan, ensuring transparency and informed decision-making. Underwriting for Pennsylvania real estate. Which of the following is a primary factor that underwriters evaluate when considering a real estate loan in Pennsylvania? Is it A, the applicant's credit score, B, the property's architectural style, C, the applicant's favorite color, or D, the local school district ratings? The answer is A, the applicant's credit score. Underwriters assess creditworthiness, usually focusing on factors like credit score, income, and financial obligations. The Pennsylvania Real Estate Commission emphasizes risk management when considering mortgages. What is the role of loan-to-value ratio V in real estate underwriting in Pennsylvania? Is it A, to measure buyers' savings, B, to assess the risk of the loan, C, to determine mortgage rates, or D, to evaluate the economic climate? The answer is B, to assess the risk of the loan. The loan-to-value ratio, key in underwriting, indicates the loan's size relative to the property's value. High LTVs may signal higher risk, impacting the lender's decision and interest rates. In Pennsylvania, why might an underwriter require a property appraisal? Is it A, to determine property size, B, to verify the property's market value, C, to assess neighborhood quality, or D, to finalize property ownership documentation? The answer is B, to verify the property's market value. Appraisals provide an objective estimate of the property's market value, ensuring the loan is supported by sufficient collateral. This safeguards lenders from extending credit beyond the property's worth. How does debt-to-income ratio, DTI, influence loan underwriting decisions in Pennsylvania? Is it A, it assesses legal compliance, B, it predicts future income increases, C, it assesses the buyer's repayment capacity, or D, it determines property tax rates? The answer is C, it assesses the buyer's repayment capacity. Debt-to-income ratio is a measure of an applicant's monthly debt payments against gross monthly income. Lenders use this to assess borrowing risk and ensure the applicant can manage new mortgage payments. When underwriting a loan, why might an underwriter in Pennsylvania examine the applicant's employment history? Is it A, to ensure the applicant works for a popular company, B, to assess income stability, C, to verify the applicant's age, or D, to determine loan interest rates? The answer is B, to assess income stability. Underwriters review employment history to gauge income stability and reliability. Consistent employment suggests lower risk, influencing the likelihood of loan approval and favorable terms. What is the significance of reviewing an applicant's credit report in Pennsylvania real estate underwriting? Is it A, it determines the market value of the property, B, it assesses the borrower's creditworthiness and financial responsibility, C, it provides the legal history of the property, or D, it guarantees the loan approval? The answer is B, it assesses the borrower's creditworthiness and financial responsibility. In Pennsylvania, underwriters analyze credit reports to assess a borrower's creditworthiness, crucial for determining loan approval. A good credit report indicates the borrower's ability to manage debt and repay loans. Why must underwriters in Pennsylvania consider local real estate market trends? Is it A, to calculate the exact selling price of a property, B, to determine potential risks in property value changes, C, to assess the buyer's personal financial goals, or D, To verify the property's structural integrity? The answer is B. To determine potential risks in property value changes. Underwriters in Pennsylvania must consider market trends to forecast potential changes in property values, thus assessing the likelihood of risks related to property investment and loan security. Loan closing. At loan closing in Pennsylvania, what is the main document that transfers the title of the property to the buyer? Is it A, deed, B, mortgage, C, promissory note, or D, escrow agreement? The answer is A, deed. In Pennsylvania, the deed is crucial at closing as it legally transfers ownership from the seller to the buyer. The title company often records the deed at the local county's recorder office. What is the role of the settlement statement in a Pennsylvania loan closing? Is it A, verifies property boundaries, B, itemizes fees and credits, C, shows mortgage interest rates, or D, confirms property insurance status? The answer is B, itemizes fees and credits. A settlement statement, also known as a closing disclosure, details all financial aspects of the real estate transaction and is a requirement under TILA-RESPA Integrated Disclosure (TRID) rules. It ensures transparency. Who is responsible for recording the deed after a Pennsylvania real estate closing? Is it A, the buyer, B, the lender, C, the title company, or D, the real estate agent? The answer is C, the title company. Title companies ensure the deed is recorded with the local government to formalize the transfer of ownership, as this is crucial for establishing the buyer's legal entitlement to the property. What is the purpose of the title insurance in a Pennsylvania real estate loan closing? Is it A, protect against property damage, B, guarantee against title defects, C, ensure loan repayment, or D, cover closing costs? The answer is B, guarantee against title defects. Title insurance safeguards against potential defects or legal issues with the property title, ensuring that buyers and lenders are protected against unexpected claims against the property. What is the Pennsylvania transfer tax, and how is it typically handled at closing? Is it A, a tax on the loan amount paid by the buyer, B, a tax on the transfer of property ownership split by buyer and seller, C, a tax on real estate commissions paid by the buyer, or D, a tax on homeowners insurance paid by the seller? The answer is B, a tax on the transfer of property ownership split by buyer and seller. The Pennsylvania transfer tax, typically 1% of the sale price, is often split equally between buyer and seller, covering the cost of transferring property ownership legally and publicly recording this change. What is the main purpose of escrow in a Pennsylvania real estate loan closing? Is it A, to ensure funds are available for the buyer, B, to manage waste disposal, C, to hold and disburse funds according to the agreement, or D, to negotiate loan terms? The answer is C, to hold and disburse funds according to the agreement. Escrow in Pennsylvania real estate ensures that all conditions of the sale are met before any funds are released, serving as a neutral party to hold and disburse funds properly. In a Pennsylvania real estate closing, who typically coordinates the closing process? Is it A, the seller's real estate agent, B, the lender, C, the settlement agent or title company, or D, the buyer? The answer is C, the settlement agent or title company. In Pennsylvania, the settlement agent or title company typically takes charge of coordinating the closing process, ensuring all parties meet their obligations and all documents are appropriately handled and recorded. Pennsylvania mortgage disclosure requirements. What is the primary purpose of the Pennsylvania Mortgage Disclosure Act? Is it A, to regulate interest rates on mortgages, B, to ensure borrowers receive critical information about their mortgage terms. C, to standardize housing contracts across Pennsylvania. Or D, to provide tax benefits to lenders. The answer is B, to ensure borrowers receive critical information about their mortgage terms. The Pennsylvania Mortgage Disclosure Act intends to provide borrowers with essential information regarding their mortgage agreements, ensuring transparency and informed decision-making for property purchasers. Which document must borrowers receive under the Pennsylvania mortgage disclosure requirements prior to the closing of a mortgage? Is it A, loan estimate, B, title insurance policy, C, deed of trust, or D, appraisal report? The answer is A, loan estimate. Borrowers must receive a loan estimate which explains the terms and costs of a potential mortgage. It is crucial for financial understanding prior to final agreement signing. Which agency regulates the disclosure requirements for mortgages in Pennsylvania? Is it A, Pennsylvania Department of Banking and Securities, B, Federal Reserve Bank of Philadelphia, C, Pennsylvania Real Estate Commission, or D, U.S. Department of Housing and Urban Development? The answer is A, Pennsylvania Department of Banking and Securities. The Pennsylvania Department of Banking and Securities ensures compliance with disclosure rules, maintaining transparency and fairness in the state's mortgage process. This regulatory oversight protects consumer interests. What information must be included in the Pennsylvania-specific mortgage disclosure statement? Is it A, projected property taxes, B, full disclosure of interest rates and terms, C, neighborhood crime rates, or D, homeowners insurance coverage details? The answer is B, full disclosure of interest rates and terms. Mortgage disclosure statements must transparently present loan terms and interest rates, enabling informed borrower decisions and protecting against misleading financial practices. Pennsylvania mortgage disclosures are intended to prevent which unlawful practice? Is it A, redlining, B, kickback schemes, C, predatory lending, or D, market monopolization? The answer is C, predatory lending. Transparent mortgage disclosures combat predatory lending by arming borrowers with the knowledge to navigate complex loan terms, preventing potential exploitation by exploiting undue financial pressure. What is the mandatory time period within which a lender must provide a borrower with the Pennsylvania-specific mortgage disclosure statement after receiving an application? Is it A, 3 business days, B, 5 business days, C, 7 calendar days, or D, 10 business days? The answer is A, 3 business days. Under Pennsylvania law, lenders are required to provide mortgage disclosure statements within 3 business days of receiving a mortgage application, ensuring borrowers are promptly informed of all terms. Which type of loan is not specifically addressed under the Pennsylvania mortgage disclosure requirements? Is it A, conventional home loans, B, equity loans, C, bridge loans, or D, reverse mortgages? The answer is C, bridge loans. Bridge loans are generally short-term loans and are often not included in regular disclosure requirements specific to long-term mortgages under Pennsylvania law.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit Birdsy.ai for complimentary study sessions with Birdsy, your AI-powered study partner.